Good evening, everyone. My name is Laurie Dubchansky, and I am presenting to you the essentials of financial literacy, focusing today on protecting your assets. What is financial literacy? Possessing the knowledge, skills, and tools needed to make informed financial decisions, manage financial resources effectively, confidently take actions to achieve goals. This presentation is not advice for you personally. We are representatives of the Financial Planning Association of Orange County doing our community service, helping to educate the community. We may touch on tax issues, we may touch on legal issues, we may touch on investment strategies or insurance strategies, and none of this is providing either tax advice, legal advice, or specific recommendations to you. This is basic financial literacy intended solely to provide education to the community. So my presentation is about protecting your assets. Why have insurance? To protect from risk. Risk is the threat of loss without the opportunity for gain. May involve losing or reducing income or assets or gaining expenses. So this means that sometimes things can happen where we have to spend our money because something's happened that we knew was a risk, but we didn't think it would happen, but it has. There are several types of risk. Personal risk. We take on personal risk many times when we do things that are athletic. So here's an example. Alex went snowboarding and broke his leg. Snowboarding has created many risks for many people, although it's great fun. And Alex had a hospital bill of $1,400. Property risk. That's when something can happen on our property. In this example, Leslie's bathroom flooded when the toilet clogged. The cost to repair this was $5,000. We can have clogs in our own houses that create problems in our houses. And then if we're in a condo situation, a clog in another unit can even impact our unit. And so there are different risks to property in different housing settings. Liability risk. If you have a party in your home and an attendee of that party sprains his ankle in your backyard, they can hold you responsible. And that hospital bill was $2,500 just for a sprained ankle. Other types of risk and insurance, for example, disability insurance covers our exposure when we're unable to work because we're disabled. So we're going to talk about how we reduce risk, transfer risk by purchasing insurance, accepting the risk, saying we don't need insurance for that, or avoiding the risk altogether. Illness. We have health insurance to protect us from severe illness. This is another example of transferring risk. We are required to have health insurance. Nobody else wants to pay those bills as individuals, so we prefer to have medical insurance. In the case of death, life insurance is another way we transfer that risk, and it helps families continue on when the breadwinner of the family has passed away, or when either parent is gone. It helps the other parent sustain the needs of the family. Property loss. Home and auto insurance provide us coverage for any physical damage to our home or to our car, and loss of use of either of those. And loss of use is an important feature on a policy to make sure you have that. Disability insurance. Here's more information on disability insurance. 2 types. Short-term disability insurance provides some portion of your salary for the first 90 days following an injury or illness. Short-term meaning the first 90 days. Long-term disability insurance kicks in after the 90-day waiting period and will last, covering some portion of your salary for 12 to 18 months. So it's important to understand what kind of disability you may have from your employer and whether it's short-term disability or long-term disability. Health insurance. California requires all residents and dependents to be enrolled in a health insurance plan or face penalties. We often see employer-based health insurance provided. That's a group insurance policy provided to all the employees of a company. There are also individual plans. You may find those individual plans through Covered California, private insurance plans, and also you'll learn more about subsidies that the government offers to those of us who don't make a lot of money. The government will help us make those premium payments. And then there's also Medi-Cal, which is the California version of Medicaid. Life insurance, another example of insurance, 2 types, term life insurance and whole life insurance. Term life insurance is a pretty simple product to understand. You're purchasing insurance for a certain number of years, sometimes to cover you till your children graduate from high school, sometimes to cover you until they're finished with college. Used for temporary needs, like some term of years, and it's less expensive than whole life policies. It's the cheapest way to purchase insurance, life insurance. Whole life insurance lasts until you pass away or until you stop paying premiums. It's used for permanent needs, so life insurance for a much longer period of time. And it's more expensive than term insurance as it comes with a component they call a cash balance, where it will create a savings that you can use to offset premiums in the future. Home and auto insurance. These are very important and really affect many of us. Lien holders, so if you have a mortgage, your mortgage company or your bank will want to see proof of insurance for your home insurance, or if you have an auto loan, they will ask to see proof of insurance. The amount of homeowners coverage will vary depending on the value of your home and the contents in your home. You want to make sure that you have enough insurance to replace the home if you had to, in the case of a fire, and also to upgrade the home for new code requirements. And then also you want to be able to cover all of the contents in the home. Contents coverage is exactly that. It's coverage for your contents if you're a renter. So many renters should have contents coverage, and many renters will find that it's required, especially in many places in Orange County. It also has a liability protection component not to be ignored. You should make sure that your liability protection covers your assets. Earthquake insurance is an option for homeowners. Now we'll talk about the components of auto insurance. There's a liability component. That means if you're held responsible for the accident, this is the amount of coverage that will be provided. Medical payments, coverage for medical expenses or personal injury. Collision coverage. Other than collision, also known as comprehensive coverage. And uninsured or underinsured motorist. These are all features of an auto insurance policy. Insurance rules vary a lot by state. In California, the mandate for auto coverage is 15, 30, 5. The first 2 figures refer to bodily injury liability limits, And the third figure refers to the property damage liability limit. For example, 1535 means coverage of $15,000 for each person injured in an accident, up to a maximum of $30,000 for the entire accident, and $5,000 worth of coverage for property damage. So, is the minimum coverage required enough coverage? In many cases, it's in your best interest to purchase coverage above and beyond the minimums, including collision and other than collision, so that you're adequately protected. With bodily injury liability, most insurance professionals recommend their coverage limits be at least $100,000 per person and $300,000 per accident. Personal liability insurance. Basic coverage for personal liability insurance is included in your homeowner's insurance policy, your renter's policy, and your auto policy. Additional personal liability insurance provides greater asset protection. It's often called an umbrella policy as it works over and above the home and auto policy. It's a great idea for homeowners. We usually recommend personal liability coverage equal to your net worth. It's relatively inexpensive and it's billed annually. Tips for acquiring insurance. Take advantage of group health insurance through your employer or Covered California. Shop around for the best policies, prices, terms, and providers. Inquire about discounts like Good Driver, multi-policy discounts, some professional discounts, and there are also discounts for attaining certain educational milestones. Review insurance annually to make sure that it addresses your needs and is competitively priced. If you have any questions, please visit our website at FPAOCprobono.org. We'd be happy to set up a one-on-one consultation with you so that you get advice that's always in your best interest based on the data we've shared today. So we encourage you to tell your family and friends that we're around for the community to provide good advice, always in your best interest by a certified financial planner. Thank you so much for watching.